So right here, right now, if you've decided to rent, we're going to leave that where it is. You don't need to know this information. However, you might want to listen, because if you decide in the future you want to become a homeowner at some point, these are some good things to know. The next question you need to ask yourself is, what type of mortgage should I get? There's a bunch of different mortgages out there, and I took some notes because there's a lot of stuff to remember. So, conventional loan. You're just going to a bank, Chase, Wells Fargo, Capital One, what have you, Bank of America, or your credit union, whatever, and you're saying, I would like to apply for a mortgage. Conventional means they're giving it directly to you under conventional terms. That means you're going to need at least a 620 credit score, and you're going to need to put down anywhere from 3% if you're a first-time home buyer, all the way up to 20% if you want to avoid PMI. Anything under 20% down requires PMI. All right. Next, FHA. FHA will approve you for a loan with a credit score as low as 580 and a down payment as low as 3.5%. Remember, there's one change though. Used to be that you could pay down your mortgage amount so that you had equity that went above 20%, and then you could drop your PMI. PMI is now locked for life on any FHA loan. So remember, you can't refi and get out of PMI on an FHA loan. VA loans, self-explanatory. Those are for veterans and their surviving spouses. For a VA loan, you need a credit score that falls anywhere between 550 and 640 because the VA works through banks, and different banks have different requirements. But there's no down payment and no PMI. So that's great for veterans. USDA loans. These are for areas of the country that the U.S. Department of Agriculture deems rural or suburban, but they want to increase the home ownership presence in that area. Under those circumstances, you need a credit score anywhere from 580 to 620, and your income cannot exceed 115% of the median income level in that area. So you can't come in balling on multiple six figures and figure, well, I'm going to get a USDA loan and move into this low-cost area. That's not going to work. These are loans geared for specific income levels to increase home ownership in certain areas that they want to increase home ownership in. Finally, we come to the jumbo loan. This can be anywhere from $830,000 all the way up to, say, 1.2, 1.3 million. Those are the thresholds, but it depends on where you live. Like a jumbo loan is not rated the same in Kansas as it would be in Hawaii, as it would be in New York, as it would be in Alaska. There's different levels for that you need to know. Also know that to get a jumbo loan, you're going to need to come with a larger down payment, and you're going to have to come with a higher credit score. They're not just handing these out to 580 and 620 credit scores. Okay, so let me wrap this up by saying I am not a mortgage specialist. You need to do your homework, do your research on the different mortgages that are available to you and what the requirements are and what the flexibility is about them later on down the line. Should you want to refinance? Should you want to pay it off? Should you want to get out and sell? That's it for your mortgages. So now you've decided which type of mortgage you want. Let's move on to the next point.